What is up, guys? Happy Monday. Today we are going to go ahead and continue with the basics and go with the easy breakdowns and making sure that you guys understand everything to the T. So as I explain what we're talking about today, if you guys are lost or confused at any time, please unmute. We don't have to waste time typing in the chats. Go ahead and unmute. I don't get upset. The chat, everybody, all the participants, no one's tripping because guys, 9 times out of 10, maybe even 10 times out of 10, somebody's going to have the same question, or someone had already had the same question, but they already got their breakthrough. But that shouldn't stop you from asking your question because someone is probably also thinking the same exact thing, right? So today's topic, guys, is going to be violations, right? The thing about trading is we have to understand our strategy in the whole. We cannot just be one dimensional. We cannot just be tunnel vision. Right now, when we look at our setups, guys, you have to understand that there are endless possibilities on what can happen just to one setup. Right. Let's say we're looking for some sell opportunities. Right. We have our setup we're looking for. Right. We can see our change of character and we're expecting the market to drop around this area. But there are endless things that can happen. We can have a stop loss hit and then go our way, right? We can have the market actually violate the setup and continue going higher, right? How do we react to market conditions changing, right? And that's one thing that I want to cover today, how to react when market conditions change. Because when you understand how to react when market conditions change, it literally takes the fear off of losses. You just have to understand how to adapt. Give me a one if that makes sense. So let's go ahead. We're just going to go ahead and break down what we're talking about today. I'm not going to go into a big old spiel because the drawing is going to take a lot of time. We all understand what we're looking for when it comes to the head and shoulder setup. Right now, I want to take more time on breaking down how to react when market conditions change, right? So let's just say we're looking for a head and shoulder, right? Let's just draw up a head and shoulder real quick. So as the market's coming down, right, making structure, doing what it's supposed to do, we know that we want to see the market continue in its bullish form, right? So as of right now, all we have, guys, let's just pull this, might as well just make it a little better. All we have right now is higher high, higher low, and that's it. In order to get in head and shoulders set up, we need to see the break of structure and then the change of character. Once we get this change of character, guys, the head and shoulder is now in play, right? So we all know that. Let's go ahead and we're going to speed up this process real quick. Market's starting to do its thing. Awesome. Awesome. We're going to keep the drawing simple because, again, today I just want to break down how to react when market conditions change. Right? So we can see we have our break of structure. Right? You can see we have the break of structure. Let's go ahead. We're going to go ahead and label this because everything should be labeled, guys. No matter what, everything should be labeled. Right? So when we see this, right, guys, when we see a BOS to the upside, what should we be thinking? You guys could continuation. We should be thinking the market wants to go ahead and pull back, and then we're going to go ahead and continue. Right? So let's go ahead and we'll highlight our zones because, again, I'm drawing this like this because this is how the market react. Like everything happens candle by candle by candle, right? So we have to start just shifting our mindset on not to be thinking so one-dimensional, right? So we're looking for buys here. Now, let's just say, right, everybody's with me on this right now. Give me a one if you're with me that we are looking for possible buys in this area based off of the starting point setup. Right? Cool. Cool. So now the market's making its way back. And if you're confused, please put a question mark. But I believe a lot of us are fairly, within our first 2 months. So we should all be pretty good. Now, market's coming back. Now, let's just say news hits. Right? News hits, and then we get something that looks like this. Boom. And the market breaks and closes below. And as this is happening in real time, we are thinking this is a change of direction. Would you guys agree with me? You guys can unmute. You guys can, you guys can type in one. You guys can put fire. Yes, I agree with you. You guys could, I would rather you guys unmute so we can go ahead and just make this call fire, So as we see this, we're thinking the market wants to go ahead and change direction and start heading down now. Right. But again, a starting point is only one option we are looking for inside of a bullish market. Right. So as the market is bullish, remember, yes, we're looking at easy starting points. Higher high, higher low, higher high. Once we see this, we are looking to continue. But sometimes the market is going to fake you out. It's going to make you second guess. And this is where risk to reward comes into play. This is where risk to reward comes into play, right? Especially if you are trading one pair, guys, or 1 to 2 to 3 pair. In my opinion, trading a short amount of pairs, a small list of pairs, is beneficial for your trading account. That's my opinion. You could ask around and see what everybody else tells you, but in my opinion, a small amount of pairs benefits your trading account, right? Because not every pair is going to give you 100%. And not every pair is going to give you snipes on snipes on snipes, right? Some pairs are going to wick you out. Some pairs are going to just get violated, and some are going to go your way. So if you're trading a lot of pairs, those losses can hurt you. They can hurt your account, right? And I realize that even though you're trading maybe more than 8 to 10 pairs, you're really only focused on maybe like 2 to 3 pairs. So you're trading all these lists of pairs, but your main focus is at least 1 to 2 to 3 pairs, right? So with that being said, I would rather us trade a small list of pairs and focus on its every move and structure point. Give me a 5 if that makes sense. Right? That's my opinion. Right? Somebody else may think different, and that is okay. Right? That is okay. But look, if we're looking at this, we're thinking sales. So what I like to do is I like to adapt. So I'm already thinking, yo, I'm looking at sales in this area based off of my shoulder, right? Based off my shoulder, and we possibly have something right here with our starting points. And they're going to go hand in hand, right? So this looks pretty solid. My mom has the same last name. Nice. I'm not sure what last name you're talking about. This area right here would be the head. Yes. Is that what you're asking, Josiah?
Yeah.
Yes. Yeah. This right here would be the head. My BOS is my left shoulder, right? We have left shoulder, neckline, head, change of direction. We're expecting the market to make its way back, give me a right shoulder, and sell off. Right. Mm-hmm. But now this is where things come into play, right? We know that we're looking for sales in this area based off the structure that was given. But sometimes the market is going to fake you out. And that's okay. Not every pair is going to give you 100. And trading isn't easy. The heck? So not every pair is going to give you snipes on snipes, right? So as the market is going up, sorry, my brother just left and my dog is going crazy, right? Market's coming back up, and we're expecting the market to give me a nice drop off. So let's say the market touches my zone, and we possibly do get a little bit of profit off of it, right? Let's say the market does give us a little bit of profit, right? Let's say it hits us a 1-to-1. Guys, if you are not breaking even at a 1-to-1 and you are not taking partials at a 1-to-2, there is absolutely nothing I can do for you guys. If you are in profit and the market gives you 1-to-1 and you're not breaking even, there's nothing I can do. It's your phone, right? If market hits a 1-to-2 and you're not taking partials, there's nothing I can do. That is your phone. right? So at this point, we should be at break even, right? But look, what if the market wants to continue going higher? And now we have something that looks like this. Boom. When this happens, guys, when we hit stop loss, we have to wait for this candle to close. When taking partials, market comes back, do you lose them partials? No. So when you take partials and you move your stop loss to break even, that's pretty much, let's say you're up $50 and you take $25 off of the playing field. You're putting $25 in your trading account. You're letting the other $25 run. And since you moved your stop loss to break even, if the market goes the opposite way like it did and it hits your stop loss at break even, technically you won with $25. The market just hit your stop loss. So you were able to take a small amount of profit off of the trade, but that's still a good thing. Does that make sense? So you don't lose nothing. You actually gained a piece because you were able to take partials. And even if the market didn't hit 1-to-1 or 1-to-2, like let's say it only hit 1-to-1, of course, let's say it only hit 1-to-1 and you moved your stop loss to break even. Once the market goes the opposite direction and hits your stop loss, you lose with, or you take a loss technically because it hits your stop loss, but technically you lose nothing because you were at break even. You were at zero. Take over the world with your $5, bro. If that's all you're partially out, bro, there's nothing wrong. Like, do not think, none of you guys should be thinking, oh, it's only $5. Bro, if you saw a $5 bill on the floor, tell me, would you leave it there? Let's be real. I'm picking that shit up. If you saw $5 every single day on the floor, would you leave it there? Guys, this is the thing, right? We I don't know if you guys pray, but we ask for these things, right? Money, we have these sayings and the things that we tell ourselves, money comes to me in large amounts of quantities every day and so on and so. When we tell ourselves these things, and you're in a trade and it's up $10 and you're not willing to take $5 off of this, do you think you're going to continue to get these $5? You're ungrateful. In a market that is only 5% to 6% are actually profitable, if you aren't taking partials, guys, you are ungrateful. There is nothing I can tell you. We are still stuck in a scarcity mindset, right? So guys, also taking partials means taking a bit of the money from the trade. Yes, Etney. Taking partials means I'm taking a piece of my profit and putting it into my trading account, and I'm going to let the rest run to potentially make more. Okay.
I got a question. Does the right shoulder need a change of direction?
Does the right shoulder need a change of direction?
The chod at the bottom. You see what? Yeah, right there. Does it need, or what if it's the even amount? Like it closes at the even amount of the left shoulder. Does it still need to be? Does it need to be a chod to be a valid right shoulder to then retest?
Yes.
Okay.
So we need this change of direction in order to even get a head and shoulder. If we don't have a change of direction, it's no head and shoulder, right? So guys, when this candle hits your stop loss, we need for that candle to close. Everybody unmute and say we need this candle to close.
We need this candle to close.
We need this candle to close.
This candle to close.
Yes, sir. We need for this candle to close. So just because the candle hits your stop loss, it doesn't mean the trade you're wrong. It doesn't mean you're wrong. The markets are going to be here to pick pockets sometimes, and that's okay. You need to know how to adapt when market conditions change, because market conditions aren't always going to be sweet, right? So let's just say, well, let's delete this because this was already a loss. Boom, market news comes in, boom, market hits your stop loss, and then what happens? Let's actually put a line right here because this is my stop. Right? This is my stop loss. Let's just put a little wick just for the visual, whatever. This is my stop loss. Your lot size can impact on taking partials, correct? well, you need to change your lot size. So when you go into Trade Locker and it allows you to partial out, let's just say you're at a 0.10. In order to take money out, you need to decrease your lot size to a 0.05, which allows you to take a piece off of the trade and allows you to keep the rest running, if that makes sense. So let's just say you had a 0.10 in a trade. I'm taking away 0.05 profit and leaving 0.05 to keep running. Make sense, Nova? Awesome. Awesome. So we need this candle to close, guys. So let's just say this candle hits our stop loss and then it starts to shrink and starts to shrink. And then this is what we have. A wick. But the candle closed underneath my stop loss. Give me a 5 if you guys are with me right now. Give me a 5 if you guys are with me right now. Guys, I don't know who's not on this call, but people are going to need this information, right? So please hit up your people, send this link out, because whoever's on this call is going to start smacking the charts and they're going to feel really, really good because they're going to know how to react when market conditions change. And the people who aren't on this call will not know how to make the next move, right? So once this candle closes, guys, I'm going to show you an aggressive entry. Everybody unmute and say aggressive entry.
Aggressive entry.
Aggressive
Aggressive entry.
This is an aggressive entry, right? So if you don't like to play aggressive, if you don't like to trade aggressive, this entry is not for you. But I do know we have some traders. You know what? Scared money don't make no money. I'm still risking, right? My percent is at 1%. My stop loss is good. Minimum 1 to 3 is good. So if you don't trade aggressive, this entry is not for you. But as soon as this candle closes underneath that stop loss, if you like to play aggressive, you can enter again as soon as it closes, and your new stop loss is this high wick, because that wick was the one to pick pockets. And we're sending the market down. We're going to continue with our 1 to 3. Does that make sense?
Yeah.
That is aggressive.
It's pretty aggressive.
If you don't like it, you don't have to trade it.
I like it.
If you don't like it, guys, you do not have to trade it. But this has happened to me. And because I see the setup and because I was coachable and because I have the notes and the blueprint on me with the proper risk to reward, with the proper calculations, I was able to get back in this trade and send this market down. Does that make sense? So everybody unmute and say aggressive entry. Aggressive entry.
Aggressive
Aggressive
entry.
entry.
Aggressive entry.
Aggressive entry.
Awesome. Awesome. Now, this is the patient entry. Confirmation entry, if you will. So everybody unmute and say confirmation entry.
Confirmation entry.
Let's go.
Confirmation.
Y'all ain't
Confirmation
I'm
entry.
gonna start kicking people off, bro. Swear. So look, we have the BOS or maybe even a liquidity sweep. Right? Let's just change this to liquidity sweep. We have the liquidity sweep. If you guys want to be patient, you got to wait for your change of character. Need change of direction or sell opportunity. And we wait for the whole setup to happen again. So as soon as we get this change of direction, let's go ahead. We'll adjust, right? Because we got the confirmation we need. And instead of using this big ass setup, we're going to use this one. And we're going to refresh with my stop loss being right here. And we are looking to shift this market down. This is the confirmation entry. Why is it called the confirmation entry? Because we are literally waiting for our change of direction confirmation. We change the SL after the BOS, right? You're talking about this BOS or this one right here? 1 or 2? Yes. So if we were looking at the aggressive entry real quick, let's go back, see if it'll allow me to go back that far. Oh, snap. Come on, baby. Come on, baby. All right, yes. So once we get our stop loss hit, if we're looking to play aggressive, we're going to move our stop loss from the old stop loss to the new stop loss. Make sense? Would that be my head sense that wick is longer than the other? Yes. This new wick now becomes my head. Make sense, Isha? Awesome, awesome, awesome. All right, let's see if I can go back to where I was. All right, never mind. All right, so we'll move this. We'll move this over here. We'll move this over here. Right, so this is the confirmation entry. Let's go ahead and just put that. We will move this here. And it's called the confirmation entry because we are literally waiting for the change of direction confirmation. Once we get this confirmation, we can continue to look for sells. The stop loss that was hit right here was here to pick your pockets. Let me know if that makes sense. If anybody has any questions, let me know. Any questions, put a question mark, unmute. Please ask your question as detailed as possible. That way I can answer it as detailed as possible.
Yo, Beanie, I have a question.
What's up, bro?
Can you put after you enter again, can you like give your trade some space, like enter at the stop loss and like leave the, I don't know how to explain it. Like,
So you're not trying to enter at the stop loss, right? Once that stop loss is hit, we got to wait for that candle to close.
yeah, I know, but once you enter the trade, can you give like the trade like space?
You're
Like,
talking about if I enter here? If I enter here?
Yeah,
Yeah,
like,
so if I enter there, yes. Obviously, my stop loss goes here, but if you want to give your stop loss a little bit of pips, something like that, would not be too mad.
no, I meant like move the whole trade, like grab it and move it up a couple pips to the stop loss.
Like this?
Yeah.
I mean, I don't do that, but if that's something you want to try, you can definitely back test it and tell me how that works for you.
All
You
right.
know, but I like to stick with structure, right? I like to stick with the structure. Okay. Makes sense, guys. Because this isn't the violation yet. I'm gonna show you the violation. We're just learning how to react when market conditions change. So confirmation entry. Everybody unmute and say confirmation entry.
Confirmation
Confirmation
entry.
entry.
Confirmation entry.
Let's go. Now we are gonna go over the violation. The violation. All right. This is important, guys, because this is what happened on US oil today. This whole setup I'm breaking down right now happened on US oil last week and this week. Okay. So let's go ahead. We were looking for sells here. Let's adjust. Now let's just say news hits, and the market just goes dumb. Market goes dumb. That's a violation. Market definitely broke. I don't know. Junior called the oil, but your boy called it. Right? This is definitely a violation. Now, a violation happens when the market breaks and closes above your stop loss. Okay. Now, there's two ways that I like to go about it. Personally, for me, I like to refresh. I like to refresh and look at the market different. Right? So for me, I'm always looking to delete, 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 and delete. Now, once I delete, the chart becomes to get a bit more clear, right? And since we were in an uptrend, right? Market was going up to start, right? Market was in an uptrend. Guys, what pattern do we like to see in an uptrend to let us know that the market wants to continue up? An inverted head and shoulders. So look at this. Since we've deleted everything off our screen and we've refreshed, right? This is what I'm seeing now, right? We had a break of structure to the downside, right? A slight BOS, bearish BOS, which is fine. And then we had that bullish change of direction, and it fooled us. I mean, this would be a bullish BOS, but because we're looking at it at an inverted head and shoulders, I want to just keep it with the terminology. Does that make sense? So right now we have left shoulder, head, and we get this change of direction continuing to the upside. Again, realistically, this would be considered a bullish BOS because it's continuing the trend. But when we're looking at it at an inverted head and shoulders, right, we had a bearish break of structure. The market was heading down, and then it changed direction and continued up, right? Give me a 2 if you and I are on the same page right now. Awesome. So I pretty much, what's up?
So is that a downtrend now, or like what?
Why would you think it's a downtrend, bro, if you don't mind me asking?
Yeah, I know it's an uptrend, but how you put the BOS, the bearish BOS, so it's going down. Shouldn't it be like on the top, like?
Well, let me ask you a question, bro. Is this candle going down or is it going up?
It's going down. It's a change of character.
Okay, yeah, that was the old move, right? That was the old move, but now we're refreshed. Get that old play out of your head. We're not staying tunnel vision, right? If we're looking at it at an inverted head and shoulders, I'm going to use the inverted terminology. Okay, so since we broke structure to the downside, obviously that was a fake out change of direction. I'm going to consider this a bearish break of structure to the downside. And we're going to have that bullish confirmation to the upside because we changed direction going from first we went down and then second we went up. Does that make sense?
Yes, bro. Thank you so much.
Yep. Yes, sir. Hey, Vinny, I just started trading. Can you try to explain what's going on? It's been like 2 days. I have no clue. That's your problem, bro. It's been 2 days. Give yourself some time, man. The biggest thing I can tell you right now is just to watch and take notes. But since it's only been 2 days, you haven't watched all the videos that we have for you, which means a lot of this probably isn't going to click within your first week, right? So just take that with a grain of salt, but just take the notes, bro. Take notes, draw this out because it will eventually start to make sense slowly, but surely. You are not going to understand this your first week. You might not even understand everything your first month, but your second, your third, your fourth month, things are going to start rolling, right? Anthony said, took me 4 months, and Anthony has been killing it, right? So I'm not trying to shut you down, bro, but you're so new. I would have to explain like everything to a T when we have videos for those, for that. So make sure you check those out, bro. But watch, take notes, and yeah, man, that's the advice I'm gonna give you right now. Yanni, does that make sense, bro?
Yes, bro. Yes. Thank you.
Awesome. Now, again, guys, this is all that the market gave us, right? This is all the market gave us at first. So if we pull this to the side, of course, that's going to look like a head and shoulder. But it faked us out. It gave us the structure that it wants to entice us in the sales. And let's say we got caught. It happens. And then the market continued in that bullish move, right? In that bullish move. So there's 2 ways you can look at this. You can look at it like an inverted, which I do because that's how I was taught when I first got here. And we can also look at it like a BOS because technically it is. We are breaking structure to the upside. And once we see a break of structure, what should we be thinking, guys?
Buys.
We should be thinking buys, right? But anytime I see a BOS, yes, buys, but I'm thinking trend continuation. Zoom user, what's your name, bro? James. Love it, James. Keep working, baby. I love it. Anytime we see BOS, I'm thinking the trend still wants to continue, right? So as I'm looking at this, guys, do we have your third day? Let's go, baby. Let's go. The boys been watching these videos. I love it. Guys, we have a breakout rally. Would you guys consider this a breakout rally? Yes or no?
Yeah.
Yes. Which means we can follow that rally back down to the last selling candle. 1, 2, 3, boom, right here. Opportunity number 1. Hey, he locked in for sure. He locked in for sure. Let me see, where we at? So this is opportunity number 1. We have a starting point in the market. So we can go ahead and wait for the market to come back. So we can go ahead and take some buys. Shift the market. If you're someone who likes playing off of starting points, this is your new entry. Give me a 1 if that makes sense. Thank you. Thank you. Where's your name at, bro? James. Thank you, James. This is your entry. Right? It's okay, guys. We were fooled. Sometimes it's going to happen. Why? Because that's all the market gives you at that moment in time. So we're taking the information and taking the best educated guess possible. Right? Okay, cool. We took a loss. It is what it is. We bounced back. And that's just assuming we took a loss, right? Because you still could have broke even, you know? But we have opportunity 1. We have opportunity 2 right here. So I'm just going to put X's because most people will understand this as a liquidity sweep, and I get it. So we have a liquidity sweep. But for me, this is a head and shoulder, right? We have left shoulder here, neckline, head, and we continue with the bullishness. So for me, guys, I'm looking, my very last opportunity, right? Second opportunity, my last opportunity will be the left shoulder with my stop loss at the low. I was just about to pull out the homie. Don't even trip. Don't even trip on me, cuz. Let's go ahead and pull it out. Bust out. Yes, sir. Flip that thing upside down, my boy. Right? We have the homie. For those who don't know the homie, guys, oops, is it this one? Yep. This is my homie. Notice how we have left shoulder here, left shoulder, head. We get that BOS to the upside. So my last buy opportunity is this right shoulder. You know, I love when Oren, he's been pulling out the because we have, let me see, we have emojis now on here. So it's actually funny when he pulls out like the eyes. Lit. Lit. It's the face, bro. The face. Where's my tongue at? I need a tongue. That's a crazy looking tongue, but hey, we here for it, big dog, you know? We here for it. Right? I didn't know this is the only tongue they got. I'm not gonna waste time looking for tongues, but that's funny. That's funny. But yes, guys, the head and the shoulder. Do you guys see it? Do you guys see this? Left shoulder, head. We get the bullishness. Now we are waiting for opportunity 1, or we are waiting for opportunity 2 to shift that market up and continue with the uptrend. Because guys, sometimes we are going to be fooled in this area right here. It happens to us all. You play lower time frames, you can expect this to happen a lot. And that's just what it is. You play lower time frames, you can expect for this to happen a lot. Okay. So we have opportunity 1 with our starting point, and then we have opportunity 2 with our left shoulder. So I'm going to go ahead, put my stop loss there. We just stretch this thing out real quick. Cool. Now, what helps a lot, right? What helps a lot is if we can go ahead and get some liquidity. If we can consolidate for a minute, guys, when we see liquidity after a setup, does anybody know what that liquidity is for us? You might not know, but it's okay to answer wrong.
Money building up.
Sell side liquidity?
So liquidity is money building up. You are right. Money is being built in this specific area, right? But when the market starts to drop and the market gives us more consolidation, market continues to drop, and we're getting some buys, guys, these liquidity points right here, they're targets. Those are take profits. Those are swing points. So yes, we want a 1 to 3. We always want to collect our 1 to 3, always, right? But when we see liquidity equal highs, I'm almost expecting for the market to go ahead and give me that TP. Boom. Continue. Does that make sense, guys? I'm going to go ahead and just delete this here. And I'm going to go ahead and just put this right here. Give me a little bit of money sign because this is some liquidity. Now, when we see liquidity, guys, on the way down to my entry, right? I want to buy. I want to continue buying. But when I see liquidity, guys, these are target points. If buy side liquidity is the only one getting targeted, right? Because guys, there's sell side, people are selling right here, and then people are buying right here. The market drops down. Who got knocked out first, the buyers or the sellers?
Sellers.
Sellers are right here.
Or buyers.
So if people are selling at this line, right? People are selling at support or at resistance, right? I don't, but some people do, right? Some people are selling. And then there's also people looking to buy in this area, right? I don't, but some people do, right? People are buying. So if the market is building sell side and buy side liquidity and the market drops, everybody who was looking to buy just got clapped. And these sellers are still in profit. Does that make sense? So as this continues to happen, right, we have sell side liquidity here, and we also had buy side liquidity here, right? Some people are buying at support, and some people are selling at resistance. Notice when the market drops, who gets taken out first? The buyers or the sellers?
Buyers.
The buyers get taken out first. So if we're continuing to look for buys, sooner or later, guys, everybody who is selling at support, you can expect them to be taken out. So yes, we always look for our 1 to 3 take profit, but if you are looking to hold and you want to get better with holding trades, you take partial at 1 to 2, you take partial at 1 to 3, and you can hold your trade to the top. And this is how we get better risk to reward as we continue to get more advanced. Give me a question mark if this doesn't make sense. And if this does make sense, you guys can give me a 1. You guys can unmute, let me know.
One.
Question.
What's up, bro?
So I understand and all, but when you enter the trade, do you want to go for like a 1 or 5, and then when it hits a 1 or 3, just take partials, or you want to enter with the 1 or 3 and then edit your TP to like a 1 or 5?
So if you are looking to hold this trade to a 1 to 5, you can put your take profit at this area here, right? You can put your take profit there, but you have to remind yourself, right? If this is 1 to 1, if this is 1 to 1, we're breaking even. It's a good question, right? We're breaking even. 1 to 2, we're taking partials. One to 3, we're taking partials. 1 to 4, we're taking partials. And then we can go ahead and let our TP smack at the 1 to 5. Does that make sense, bro?
Yes, but thank you.
Yes, sir. Go ahead and just move this over just a bit so we can have something here. Let me go ahead and just try to extend this over. Yeah, I'm just gonna extend that over to make it look a bit cleaner for the example. Does anybody have any questions, guys? I'm telling you. What's up, Shashil?
So like, I noticed like for like 4 hours or 2 hours, there'll be a counter at like on the way right for the numbers. Do you know what I'm talking about?
I don't.
Like for the coordinates, there'll be like a little, it'll say like 30 minutes, or like for 4 hours.
I
it'll say
understand.
like,
Yeah, you're talking about time frames. I get you. We're on the same page right now.
I'm not really sure. Is that for like when you're supposed to enter the trade, or what does that mean?
So let's just say we're on the 4-hour time frame, right? If
Mhm,
this setup is on the 4-hour time frame, I have to wait for this 4-hour candle to close.
mhm.
Does that
So
make
it'll say
sense?
like, 30 minutes, and then so like in 30 minutes of the time that candle will close.
Oh yes, if you're talking about the numbers that are on this right-hand side, it'll have that ticker, the time, the countdown.
Yeah.
Yes. So once that candle closes, right, let's say there's 30 minutes left in that candle time. Once that 30 minutes is up, now you know how to react.
Okay. All right.
Make sense, bro?
Yeah. All right. Cool. Thanks.
Yes. Can you also set reminders? Yes, you can, Evelyn. On levels, you can set alerts, right? You can set alerts. So let's just say I wanted to set a break and close alert. I'm just gonna put one right here, might as well. Not sure why I would do it right here, but let's just say I want to put a break and close alert. I need to have a line, right? I need to have this line, not this one. Can't use that one. I need to use this one because this one gives me the green numbers on this right-hand side, right? On this right-hand side. So when I go ahead and press alert, create alert, you see how it says price? The price here, I'm going to use these numbers. So you can go for crossing up, crossing down. And if you're looking for a break and close above, right, especially for the stop loss, I like to put closed above, because crossing up, as soon as this candle touches your line, boom, you're going to be notified. You're going to be notified. But if we put closed above, you will not be notified unless the market actually breaks and closes above your stop, your alert. Does that make sense? Yeah. So for anybody who hasn't invested into TradingView yet, I know the biggest sale is on Black Friday, but guys, use levels. Doesn't matter if you're trading with the levels training wheels or not, or you trade smart money, guys, Levels has 100 alerts. And if you guys have access to Levels, you guys literally get 100 alerts. So it's easy. I'll show you how to do it. I'm going to go for crossing up. My numbers is 151, 151.717. Only once. I need to show pop up and play sound. And as soon as I create it, there's going to be a line that goes across. That is my alert. Right? That is my alert. So I'm gonna go ahead and just delete that. Now, alert log, show my alert, EURJPY, pick that off. All right. How do I mess with the alerts? Before I show you guys that, are we all good here, guys? Do anybody have any questions before we continue? Sergio, you have a question, or are you good? Okay, got you. Cool. So my alerts. If I want to be notified with the Levels alerts, go to settings, my alerts, and turn this on. Go to settings, my alerts, turn this on. Now the second thing you have to do, second thing you got to do is go to Eovia. Oops. Go to Eovia. Go to this bell right here. Go to this bell, right? I'm literally showing you guys how to do this, right? So if you guys do not have alert set, I'm showing you guys right now. Go to this bell. Go to the tool for strategies. I don't know why I have that on. I only have harmonics, levels, and swipe coin on. So as soon as you turn these on and select save settings, as soon as you save it, you will have all your charts on deck. So every alert that you place will notify you on the Eovia app. Give me a 10 if that makes sense. Yes, this is going on my YouTube, Sergio. I am up to date, baby. I am not lagging on any more videos. Cool. So let's go ahead, and I want to break down US oil because I sent in a sell not too long ago on a 1 hour time frame, I believe. The Brent oil, nah, crude oil.
Was that on your story?
Yes.
That was crazy, bro.
So look at this. Why was I looking for sells here? Let's go to the 4 hour time frame real quick. And I was looking for, I was looking for sells because we have a starting point right here. We have a BOS to the downside, right? Strong bearish momentum. We also have a red arrow. So if I match this red arrow with the bears button, boom, Levels is saying, hey, there's a starting point right here. Okay, cool. I highlight the starting point. Extend right. We'll make this red, right, with my stop loss. This is the highest wick in that area, so that looks like a solid stop loss. If you don't like that, you can definitely use the high, but that doesn't look too bad. Okay, now check me out. As soon as we get it on the 4 hour time frame, I'm sorry, on the 1 hour time frame. And again, we're not focused on anything. We're not focused on anything to the right of this black line because technically that didn't happen yet, right? What I see is we have the bullish BOS. Levels is letting me know. Levels said blue arrow. If I match it, there is a buy zone there. So we have a BOS to the upside. Then what else do we get? As soon as we get that BOS, we get this change of character. And I believe this one even gives it to you right here as well, if I'm not mistaken. Ooh, it doesn't. So that's probably why I was playing too aggressive looking at this. But that's okay, right? We get the change of direction. So I'm looking for sells right here. Market gives me an opportunity. This is my sell zone. My stop loss is at this high. So at this moment, my stop loss is here. and the market doesn't give me a 1-to-1, this actually is just a simple loss. But that's okay. I'm not worried about a loss. Guys, like I am not worried about a loss. You just have to know how to react when the market conditions change, right? So check me out. I was looking to take sales, gave me a little bit of profit, didn't go my way, didn't even give me close to a 1-to-1 to break even. So this is just a flat loss for me, right? But now I have to readjust. Okay, I was wrong. I was wrong, right? Stop loss definitely got violated. We can see that. So I need to refresh. I need to freshen up my eyes. I need to freshen up my eyes. And as I'm looking at this, I'm still, in my head, I'm still thinking about sales. But the only thing is, when I get this, look at what the market builds. What do you guys consider this right here?
Liquidity.
Ahead.
This is
Oh.
liquidity. The market is building liquidity. It's okay, Josiah, bro. It's all good, bro. I would rather you give me 100% and be wrong, and then just be a student and coachable after, right? So that's fine. The market builds liquidity. So now what I'm thinking is maybe the market doesn't want to head down now. Maybe it wants to continue higher, right? Maybe it wants to continue higher. What did I miss? Because when you're wrong, it's usually you miss something. And this is what I missed. I missed the BOS of the upside. And even though this was taken right here, or I guess not, on mine, it had tapped into it. So this wick was just a little bit bigger. It was like that. The market tapped into it and continued to go higher. So if I'm looking at that, I'm thinking, okay, well, I was wrong, and that's okay. But what did the market do? Well, we took liquidity, right? We took liquidity, and then the market continued in that bullish momentum. Give me a 5 if you guys are with me right now. Awesome, awesome, awesome. So right now we have an inverted head and shoulders. It's not the cleanest, but it is one. As soon as you see the market take liquidity and then continue to break structure to the upside, guys, we were wrong. Accept it and adapt, right? So this is my left shoulder that I'm looking at right here. With my stop loss, I'm just going to use this. Never mind, it's probably way, way too far back. Yeah, it's way too far back. I'm just going to leave it like that. So this is what I'm looking at. Now, what is this right here? This high is already a 1-to-3. It's actually a 1-to-3 and almost a 1-to-4, right? But let's take a look. Market comes in. We can already see the liquidity, the equal highs. We can already see the equal highs. So in my head, I'm good with even just taking this, right? That's fine. And I'm still good with my 1-to-3. Don't get me wrong. But as we tend to develop, you guys can also stretch out your risk to reward. So I would like to take the highs. The market comes into my setup, doesn't put me in because I was focused on the 50%. Comes in a bit deeper, and then right away takes new highs and continues the market up. Guys, do not fear a loss. Understand how to adapt when the market conditions change. It may take a while, right? This whole setup was, let me change the date, I believe. Okay, we're on Los Angeles. When was this? Give me a second. The 26th, what is this? 26th was on Wednesday. 24th was on, so from Monday, this is literally Monday, right? Monday, Tuesday, Wednesday. Wednesday hit me out. Thursday, Thursday still hasn't got me yet, right? Thursday still has not put me in yet. And then the 28th is Friday. So you can see right here, guys, where I'm looking at this black box. See how it says 27 March 25th? Then I go over and it says 28th March 25th. Guys, the market put me into this trade on Friday. And then didn't continue higher until Sunday and then Monday. So it may take a whole week for this setup to come back for you. But that's okay. Once you know where you're waiting, guys, you just have to wait. Josiah, what's good, bro?
Yeah, so like, say I found that on NAS, right? On the 1 hour time frame, it took me a whole week until Friday. Could I still find my, like, you know, my little scalp trades on the 5-minute and 15-minute?
If you want to play aggressive, yes.
All right,
But at
bet.
the end of the day, if your scalp trades get smacked and you've been waiting for this, you know exactly where it's headed towards, right?
Yeah. The
Exactly.
upside.
Exactly.
Bet.
Exactly. So there's also another inverted. I'm going to go ahead and clear my chart. If you can annotate on my screen, that would be beautiful. If you can go ahead and draw out our next inverted. The mindset for trading is if it hits your stop loss, it's because you expect it to hit. When you set it up, if it hits your TP, it's because you expect it to hit your TP. I mean, you're not wrong. That is what we expect, right? All right, looks like is so marking up. She got to be marking up. Okay. So you're looking at this right here. This is your left shoulder. Left shoulder. Left shoulder. Head. Continue higher. Is that what you're looking at? Okay. Go ahead. If you guys can chill off the drawing so can break this down for me, I would appreciate it. Oh yes, I do see that right in there. Yep. I do see that. You're right. You're right. And that also goes hand in hand with this starting point player that was right here. Right? We do have a BOS of the upside in this specific area, right? This area specifically, we do have a little breakout. This was a good move. But when you see that it actually creates equal highs, right? This move was taken. Where's our next move after that? Right here. Right. So I would have been waiting. That already looks like it hit a 1-to-1. I'm sorry, a 1-to-3, in my opinion. That looks like that was a smack trade. If you entered at the 50%, that looks, just to here is a 1-to-5. So 1-to-3 happened right here, which is, in my opinion, that's a good trade. That's definitely a good trade. If you traded at the beginning, this gave you a 1-to-2.5, which would have been a partial out. At least you lost with a little bit of money, right? But now where is my next trade at? If I'm looking for buy continuations, right? Let's refresh. If the market came down here, what did the market take out? The market just took this out, guys.
Liquidity?
That was liquidity. If I even go on a higher time frame, it looks a bit cleaner. I'm just going to use this for now, right? We have a left shoulder, neckline, head, change of direction, right? We get that break of structure to the upside. But before it gives us the break of structure to the upside, guys, I adjust my zone. So we have opportunity there, but we also have our starting point right here. Really big starting point on the 4-hour time frame. I'm going to go to the 1 hour and minimize. If you want to go to the 15 minute, see if you can minimize. That's not a bad idea as well. Same area, pretty saucy. But now this is what we got. And what is it doing? Building liquidity all over again. Left shoulder, head, change of direction, equal highs. If we start coming down and start slowly coming down, consolidating, making its way down, guys, I'm looking to continue this trend. Does that make sense?
Oh, so you got two. You can do it off the order or the starting point and then the left shoulder, right?
Correct.
All right, for sure.
And this is where we run our risk to reward, right? If this is something you're gonna do, right? This is something I'll just finish this and we'll get off, right? If this is something you want to do, entry here, stop loss here, 1 to 3. Now let's just say the market comes over here in your zone, puts you in profit, then hits your stop loss. Okay, cool. I ran my risk to reward. I lost 1% or whatever you're risking. Maybe it's a test trade. And then as soon as it hits your stop loss, you can literally enter again at that right shoulder. And then we would be expecting the market to continue with this trade. So you, again, risk to reward. You take a loss like a boss. You lose 1%, and then you bounce back again. You hit your 1 to 3, maybe even more if you hold, and you come up 2%. What's up, Brian? I see you got a question, bro.
Yeah, bro. So I was gonna ask, I know we're gonna get down to those levels to, I guess, do buys, right? But my question to you is, how do you feel about the idea of taking sells while we go to that level? What does that look?
So for me, I don't really counter trend as much, but that's not a bad question, right? I don't really counter trend as much. I usually just wait, because once you counter the trend, guys, this is just my opinion. Everybody has their own, but then you're in the markets every day, right? I want to just wait right here, right? I just wait. If the market continues higher, then I start looking for more buys, right? So for me, I don't want to trade every day, bro. Like, I'm busy, I got a shotty, trying to talk to her all day, trying to hit the gym and get right. You feel me? Like, I got family, bro. Like, I don't want to be on the chart every day. So for me, I don't mind just waiting where I'm supposed to be waiting. But I'm not saying you can't. I'm not saying you can't counter trade. So let's go to the 15-minute. Check me out. Brian, I'm just going to give you the clean structure here.
Talk to me.
This would be a break of structure to the upside, right?
Yep.
BOS. Now, let's just say if the market wants to continue, it would just go ahead and continue, right? Now, if the market changes direction and continues down, if the market wants to continue, let's clean it up. If the market wants to continue dropping down and we get this break of structure to the downside, then we possibly have a play here. Left shoulder, starting point in this area, possibly take some sells. Does that make sense? We have a shoulder here, and we also have a starting point here, because we should have had a breakout rally to the downside, and we should also have a BOS in this area. Does that make sense, bro?
Yeah, it does.
Okay, cool. But now, if you take that loss, right? If you take that loss, you have to understand you took that loss because that was the counter trend. You were trying to sell to the buy when the market was just aggressively buying.
Yeah,
Makes sense, bro?
I get it. Would you say it has a bit of a higher risk?
It is more of a higher risk because the market is fully in an uptrend, especially when you see like something like this. For me, I'm like, I'd rather just wait, massive movement. For me, I would rather just wait down here.
Okay.
But that's just me. Back test, study what you do. Maybe you take these on a demo and then you take the continuations on a live, right?
Okay.
But yeah, I just wanted to let that be known, because you can take counter trends, but if you take that loss, it's because you were looking to sell when the market was actually buying.
Yeah, that makes sense.
Got you, brother. Yanni, I saw you had your hand raised, bro. Did you have a question? Sorry, I took long to get to that.
No, you're good, bro. My question was, like, the bigger the time frame, the more money or pips you're like putting into a trade, like higher rewards and like more risk, or
So for a higher time frame, you're usually risking a bit more pips, right? But the same thing, like if let's just say right here, right? For me, the pips don't matter because it's all about leverage, right? You see how this stop loss for somebody's gonna be like, yo, that's fucking big, But this can be $100 loss, bro. This can be $1,000 loss. This can be a $5 loss, but this can also be a $10,000 loss. Now, this trade setup right here, if we're able to get this, let's just use this as an example. A bit smaller stop loss. I know it doesn't look like it because we're on a lower time frame, but the pips amount, it's definitely smaller, right? Now, this can be a $5 loss. This can be a $100 loss. This can be a $10,000 loss, right? So it doesn't really, for me, it doesn't matter like how many, like I'm not the type of person like, oh, I'm only risking 20 pips because that's what I risk. I'm going to allow the market structure to give me my stop loss, and I'm going to calculate off of that. Does that make sense, bro?
Yes, bro. Thank you.
Awesome, man. Any questions before we end this call tonight? Again, guys, on Monday, I know we didn't look at too many charts. What's up, Josiah? You got one? Okay. Guys, on Monday, I tend to just break down the charts that we guys can have the full blueprint on you, especially throughout the week. Like, I don't mind giving you guys the blueprint. Like, you guys should all have this stuff anyway. So like if you're continuously getting clapped and you guys don't draw when I draw, or you guys don't take screenshots, but you guys expect me just to go over charts, that does nothing for you guys, right? Take the notes, be consistent, stay disciplined, and on Friday we'll get back to it. If you guys want to send me chart or send me charts in the chats, you get some feedback. I don't mind doing that. Once we have this information done, locked and loaded, and everybody has this blueprint, then we could just focus in on the charts and just look for these examples the whole call. But I would rather spend the majority of the time giving you guys everything you need, aggressive entry, confirmation entry, and the violation. I would rather give you guys that, right? So, I apologize for spending most of the time on the examples, but at the same time, I really don't apologize, because the basics will keep you confident. The basics will keep you confident. Know exactly how to react when market conditions change, guys. Don't fear a loss. Understand what to do next. The fundamentals will always win. Teo, I appreciate you, brother. Guys, you guys have a great trading week. Trade responsibly. Continue to calculate. Send in your charts to grab feedback. And let's kill the week as a group. Peace and love, guys. I will see you on Friday.